Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you Sunday, June the 11th. The year's 2023. Let's talk trading. It's time for the weekly open and gap. These videos are for educational purposes only. Your results may differ from mine. So we'll take a quick peek at the weekly chart here. We can see that all the gaps have filled. And the pound is 10 pips above the weekly open, 10 off the high, and 15 off the low. We zoom out to the monthly and see we've got a green month, 134 pips above the open, 17 off the high, and 205 off the low. And for those of you wondering why just mainly do the pound, it's because all you need is one pair to trade. You learn that pair, and you can trade it profitably. It doesn't wear out. There's lots of pairs to trade, so sometimes some people like to trade more than one. I used to do that using the dashboard for the different methods and to keep track. Sometimes it's good to see what, say, all the pound pairs and all the dollar pairs are doing. If you're trading, the pound dollar, if you're trading the euro dollar, you might want to look at the other euro pairs just to get an idea. But that's why. But the methods that we use here on the pound can be applied to other pairs. Somebody asked about if these methods can be applied to other instruments, and the answer is yes. You can run the statistics, but you either have to pick a method and find which pairs would work best with that method, or you pick a pair and you find out which methods work best with that pair. So we have said that all the gaps have filled. So now you can see we're putting in the range, opening range for the week. We are above the opening range for the month. And for the year, we're 483 pips above the high, 107 off. I'm saying we're 43 above the open, 107 off the high, 770 off the low. You can see here we were in that upper wick zone for the month. And let's see, that break would be at the open 25.51. So to break out of that wick zone, we have to come down to 25.51. We're out of the inside bars on the daily, weekly, and monthly. And you've got a handful of inside bar trades to participate in so far today. Notice no pairs are over 100 pips in range, so we're kind of starting off slow. And we're right in that buy zone area here. As you can see, we haven't been below the weekly open much. After that first hour, we haven't been. So keep that 25.62 number in mind if you're thinking about shorting. That's one thing. If you pick a line, you want to trade away from it. So if you pick the open and it comes down to the open here, the daily or weekly, because it's the same today, then you want to go short. So here at these lines, you see, if you pick these lines to buy zone, you want to go long. You want to trade away from the line. So if it gets up here, but you've been trading away from the line, you just have to not take that trade. That's not your trade. That's not part of that method. Now you might be doing, take a look to the left here, and you might see price, say it fails to close above this level here, it goes up and comes back down, you might want to take a short at this line. But you pick the line and then you trade away from it. And we don't have enough range for the rats at the moment. Pivot trading plan says near the pivot we want to short, It looks like we'll have to see if we hit that pivot or not. I think we have. Near R1, the bias is short. Bambino flex indicator says to go long. So we have taken out that daily pivot today, and we've got the weekly pivot down at 25.11, and we've taken out the monthly pivot. And in and out of the upper wick zone already, one time, two times today. So it looks like we're trying to hit it. And remember, 75 is a psychological line. In fact, there was some other trader was talking about round numbers, and I guess psychological levels. So it's nothing new. It's just one of those things after you get enough seat time, chart time, you start to see certain patterns, and then you can just trade accordingly to what you see. And sometimes you make a profit and sometimes you don't, and that's why we have stop losses in place. Let's see here. The range so far this week is only 25 pips, but as noted on the weekly wrap-up, we hit the 75 percentile at 222 pips last week. And I wonder, are there any traders that trade this Asian session? I'm just curious. Because we're looking here at price action simple, and we've got the lines set 25 pips apart. So as price would near the 50 and it starts going the other way, you trade away. If it crosses, then you start trading away from it to the downside. So you can see here at 75, you'd be looking to short here. It gets above it, you'd be looking to long. So notice we had a 3-ball here, and you can see we've crossed a few other 3-ball levels. So just taking those shorts may have paid off, but not on this particular broker because you can see the spread here. So usually don't trade at this time of day, so I'm not missing out on anything. Notice there's a gap here. That gap probably should get filled. And we haven't pushed the year-to-date accumulated range. We went over this Friday's video. And we were looking at some of the H4 breakouts. Now we can switch time frames. We can look at the daily also. So low minus previous low. You can see only a 44%, and this here, that was set at, that had a time filter, so we need to remove that on the daily. So use time filter has to be set to false. So you can see here it was making 4 pips, up to 5 pips. You're in the pretty much a coin toss range. And the low minus previous low on the breakouts, you're less than a coin toss. So I guess that's in the last 100 days, that's kind of telling you something. Price doesn't seem to want to go down much. Of course, there are days when you can get more than just 1 or 2 pips. But what this tells me, if price is hitting that daily previous day's low, I want to grab my pips unless it just really breaks it and breaks it hard. I mean, you can see there's a couple of days like here and here, but for the most part, it hasn't been happening much. And that's what this is telling us using the last 100 days. You might even want to narrow that down to the last 20 or last 30 days, 50 days, 60 days, just whatever. You know, certain times, certain breakouts, you want as much data, cover a long time span. Sometimes you just want the last time span, because if something's changed within the last 30 days, you want that to be reflected. You don't want it to get buried in the last 1,000 days, because you're not going to see that change. You're going to know something's different, but your statistics aren't going to tell you. So that's why sometimes you have to run these same stats. You know, maybe you do it for 10, 20, 30, 40, 50, 100 days, and you see where things start to change, and then you go, okay, now I know what's going on. So I hope that answers those statistic questions that one trader had. And if not, feel free to ask, you know, more questions. And the more specific the question, then the better the answer I can give you. Yes, they were asking, see, what did they want me to do? To explain the exit playbook or something, because they were getting chopped up. Once again, you have to look at the statistics. And if you do something and it happens 2, 3, 4 times in a row, then it's like, and then you just sit back and you watch and it keeps happening, then you need to make an adjustment to exploit what's happening. So if you know you get into a trade and it inflects on you, and then it always runs about 2 to 3 pips against you, well, then maybe you could either A, say, okay, normally I take that trigger. How about I wait, see if I can get in at a 2 or 3 pip better price and jump in there. Or you take the trigger, but maybe you only use a half position or a third position or a quarter position. And that way, if it pulls against you, so say you go in with the third position, it pulls against you those 2 or 3 pips, and then you go in with, you know, either another third or 2/3. So now you're at full position, but a better price. And then if it normally moves back to your price, now you're in profit. So once again, that's part of trading. You have to adapt to what the market's doing. And just because the method says one thing, if it's not working, you know, sometimes it's just a minor adjustment. Just observe. And then you can make those alterations. And that's why I think I had written the that 2 pip trailing entry indicator. I don't know, was it a couple months ago I put it out there? I think it was sometime this year. I think I put it out. But, you know, that's just one thing that you can use to your advantage. So, fellow traders, I hope you had a fun and safe weekend, and I'm going to wish you a profitable trading day, weekend for the rest of June, and hey, for the rest of the year. Wish you profits. And let's see, Stanley Cup Finals tomorrow. Let's see if the Panthers can pull one out. They're down 3 games to 1. I just like them because they beat the Bruins, and I hate the Bruins. So, and NBA, the Heat, I think they need to pull one out too. So, but really, none of the teams are playing are my favorite. I'm just glad the Celtics got beat and the Bruins got beat. I'm just happy for that. So, fellow traders, when you're trading, always remember, never forget. It's not what you trade, it's how you trade it. So go out there and drain the banks. This is TheRumpledOne, over and out.